And welcome back, Andy. Welcome back to F.A.C.E, my trading warrior brother.
Hey, Dale. I'm doing right. Well, how are
All
you?
right, all right. I know you're short this market. So anyway, Andy, great to have you back. Is my guess correct that you caught shorts into this decline, and are you tempted to take some profits and book some profits here?
You mean on SPX? Yeah.
Yeah.
So I think there's a lot going on.
And
I'm tempted.
besides that, bro, do you want to share your screen or do you want me to do it? Or
Um, you
we
can
could
do
show
it.
our,
I don't have charts prepared today.
okay. All right. Well, then why don't we go to our videos so at
Okay,
least people
sure.
could see us here. Okay. There's me on a Monday morning when the owls are hooting before the roosters get up on the West Coast.
It seems like you have to permission it.
Oh, Blake, can you allow Andy to share his screen?
Let me see if I can do that. I will let's
Because
see.
I think you're still the host.
Let me do this. How about I make you host?
Okay.
I'll
All
make
right.
you the hostess with the mostest. Just give me a second. I'm not sure how I do that, but I'm gonna try, Dale.
All
Gonna
right.
give it a whirl.
Anyway, I'll share my screen and we could talk about what's going on here.
Sure.
And face or no face, we're in face. So why don't we start with S&Ps? Where's your head at now after this big decline?
Yeah,
Do you
on
think that
Friday, I did cut about a quarter of my risk. Sold some short dated puts spreads to
yeah,
get a little delta, just because I was fairly optimistic all week and all weekend that the depositors of SIVB were going to be made whole. And I thought maybe we get a risk on rally on that news. Well, at least a possibility of that. And so
we did for a few hours.
yeah, and I thought
Right?
about dumping the hedge, but taking a quarter of my risk, I'm still quite short. I'm short Nasdaq, which is not working because of the strong bond tape. Short SPX quite a bit, and short Euro stocks, which is starting to work on quite well. I still don't know what the news is yet on why Unicredito was held, but that's something to pay attention to regarding Europe. But that's all working out pretty well.
Okay. Anything in your wheelhouse that you're doing with the dollar? Any
Yeah, so
currencies that
I was
go ahead.
long dollar yen from 130, dumped it around 136,
Okay.
and
So Andy's talking about the futures.
yep.
Okay, so
Actually,
we have it paired the opposite way here. So
right.
you caught this.
No. I caught so I'm much longer. Not unlike many of your viewers, I'm much longer horizon. I caught the rally in US
This.
dollar from 130 to 136. And
Okay.
did it through long options, long
Okay.
dollar calls.
Okay.
So, at this stage, the dollar seems to be, obviously suffering from an expectation that rates are going to be that the hiking cycle is completely over.
Do you buy that? Because
I really don't.
Okay, because is it possible that this is just you look at this and this was A and this is B and we're getting C and then we head up again. Why don't you buy it that we've seen the peak in rates?
Yeah.
There's a 10-year.
Yeah. So I think the big question is, has the Fed abandoned its inflation fighting mandate, or are they going to luck out that they've done enough and the economy is broken and inflation's going to come in? Regardless, jobs are still extraordinarily tight. No one lost their job in the Valley. Everyone got their money. And so what's happened to sentiment and what's happened to the front end of the yield curve is fairly straightforward. Everyone expects went from 100 basis points over 4 meetings to potentially a cut to potentially no hike, and no hikes for 4 meetings in aggregate. And that that is just the Fed's, the perception that the Fed is going to address financial stability as a priority versus inflation fighting.
Yeah.
I think that's the wrong take. I think there is some. I think there was some. There are many, but certainly one notable bank that has decided back in 2020 to ride the interest rate curve and got destroyed being long bonds for the last, call it
A year. All you had to
18
do is be
months.
long. Yeah, a year.
Yeah, so they
A
were
year.
they were long bonds, levered long bonds during the worst bond sell-off in history, and
Yeah,
so that's
ever.
not a big surprise that a levered long bond.
You know what else? You know what else wouldn't be a surprise, Andy? That if there's, the cockroach theory, they're not the only ones. Okay.
Right. So I think
there's got pension funds are, is the Fed going to make everyone whole that's down 50% on their bond portfolio?
Yeah, I think you have to look at leverage and you have to look at mark to market, and unlevered marked to market losses. Well, let's step back for a second. The total holdings of all US banks of bonds and mortgages is $4.4 trillion. Their mortgages are, like a 10-year note. And 10-year notes are down from peak to the bottom last week, about over the course of the last year, about 15%. And so there are $600 billion of losses on $4.4 trillion of inventory that banks who are levered are, and most who are hedged, but some like SIVB had absolutely no hedge. And so they're levered long and they're getting taken out. Nothing more than that. Now, are there other levered longs? Undoubtedly. Yeah. There are other banks that, we saw Signature get taken out.
Yeah.
There are probably a handful more of Now, that said, today, bonds are up 5% since this all started.
Yeah. Right.
And, that's $200 billion of gains from the lows that the unhedged, if the global banking system was unhedged, that they're now the recipient of.
Look at that.
Right.
And we're not even,
by the way, it's trading at 108, right?
Yeah, right here.
Right.
I kept saying island bottom, same as the island bottom here. You can't step in front of it, and we get a breakout here in the bonds, which looks like it's a possibility, Andy. We break out over 110. You could.
I see the technicals, and I'm also saying that we just had the FDIC have to take under two banks that were levered long bonds. And so my thinking is, if I were the FDIC and I was thinking about the markets, I would think about going to a few other banks and finding out if they're still levered long. And if they are, say, what the heck are you doing? And I'm sure a lot of, people who had a near-death experience at many of these regional banks are saying, wait, I'm levered long bonds and they've just rallied amazingly. Maybe I let them go.
Yeah.
So I think there's actually a very, and by the way, SIVB had $100 billion of levered long bonds that the FDIC just took on. Are they a buyer of bonds or a seller of bonds? I think they're a seller of $100 billion of bonds today. And yet the bond market is massively rallying into that certain supply from the global, from the US bond banking community. They're not they're a seller of bonds. They've just almost gotten destroyed. And now they have the opportunity in a 5% bond market rally to get safe. The FDIC is certainly going to, condone that behavior. Laud that behavior. Anyway, agree with that behavior.
Yeah.
And these guys have the global banking system, the U.S. banking system just got a breath of fresh air, not from any bailout.
Yeah, from the move in bonds.
From the move in bonds. Sell Mortimer is my view. Now the offsetting point The offsetting point on that is the Fed is done. Whatever, the economy is now in a deflationary recession, and the front end's going to continue to, it's already rallied 100 basis points in 5 days. The front end's going to continue to rally, and the back end is going to get, which was already heavily inverted, is going to,
Right.
bull steepen but still rally.
Okay.
And I guess that's a possibility, but all of us Wall Streeters are focused on this crisis, and nobody's lost a job because of this. Jobs report was, strong-ish with a little bit of weakness in wages. CPI tomorrow, who knows what it is? Listen, if it's bearish, if it's low, if the CPI is cool, sure, this bond rally can go on because there's going to continue to be, hikes.
Well, I know you're a commitment of traders guy.
Yeah.
And I interviewed someone. Everyone was very short bonds down here on the COT, weren't they? Yeah, a lot of people caught short.
There's a technical problem on that, Dale. That COT data has been corrupted since due to a data hack, and is outdated through February 2nd.
And that far back, huh?
Yep. And so anybody that was short on that report made a fortune in the last, up till 3-4 days ago, and gave it back. I don't take much from that, the late data.
Okay. Well, an unknown market wizard did. I interviewed him before that happened. So anyway, I'm just saying, and I know you have a bias. You're bearish bonds. You have a bias.
Well, I haven't been bearish bonds until yesterday and today.
Okay.
I've been
all right, but
I've been neutral bonds until today.
Okay.
Because 4 days ago, I've been short twos, and 4 days ago I said, wait, 100 basis points of hikes are priced in, and we're running into a CPI that could be cool. And so I bought some SOFR, 9-month SOFR contracts, because, the hikes were way too high. Now, I dumped them on Friday, and that was a little early, but, those SOFR contracts rallied massively and protected my twos short. And now I have I think, a very nicely priced twos short. So I see you clicking to the metals. And I think
you brought up silver.
No, sorry, SOFR, SOFR.
Okay.
Euro dollars.
Oh, I see. Okay.
But that's a good segue.
All right, go ahead.
So again, we're balancing this possibility. We're balancing the two mandates. We know the third mandate, full employment, is being met. We're way away from the Fed having to worry about full employment as one of its mandates. Now we're dealing with the inflation mandate versus the financial stability mandate. If they were to pivot, if they were to cut, or if they were simply to pause, or maybe even if they were simply to do 25 instead of 50, but certainly if they cut, that to me is saying we have completely abandoned our inflation mandate.
Yeah.
And if they were to do that, you can't own nominal bonds. You can't own a single nominal bond anywhere on the curve. You can own TIPS because growth may still come in. You can own stocks because they're a nominal asset, and they benefit from inflation and growth if that were to be the outcome. And you have to own metals. And I think that's the pivot. If you see the Fed not hike on Fed Day, I'm just selling every nominal bond I'm short them right now, but I would want to sell every additional any nominal bond I was long, I'd want to short. And I'd want to buy 1/3 gold, 1/3 stocks, and 1/3 TIPS, because giving up the inflation mandate is at this stage, before inflation is clearly dead, and going toward financial stability, is terrible for the dollar.
Was
and
that 1/3 silver, you said?
1/3
1/3
gold.
stock? 1/3 gold. Okay, yeah.
Now, that's if
Gold
they
for
cut.
okay. That's if they abandon their inflation fight. So
Yep.
it was 1/3 gold, 1/3 stocks, and 1/3 what?
Tips, now
Tips. Okay,
inflation-linked
yeah.
bonds.
Okay, got it.
And
All right.
so,
So
that's the
between now and then, what are you doing, buddy? I mean,
right
we have
now I'm
seen.
looking to look right now. There's a March 31st is a fairly technical situation due to a collar that I describe regularly. It's a quarterly roll of a $20 billion S&P collar. The important technical levels there are 3630 and 4065. 4065 isn't in play right now, but 3630 is. So I could easily see us hitting and going through that level, and that's where I'll be covering.
Wow. Okay, that's still quite a distance away. Yeah, I have some cyclical lows due around the Fed and the equinox next week. So we'll see what happens there. So that's an interesting collar. So we go through 3630. That means that people that have sold the puts underneath, right?
Yep.
They're going to have to get short futures against the position.
Right. So
Okay.
if we start heading to 3630 by, OPEX this week is always a question mark. So we
Yeah.
may have some support in the short term, but after this Friday, if we start dropping toward, 3750, 3700, we are overshooting 3630.
Okay. Are you going to the bank to pull your deposits today?
I am not. I
Are
don't
you
think.
worried about bail-ins at some point in this, if this cycle continues to unravel and this is just really one of the first major credit events. Shouldn't we be looking for more of these as the tide goes out? And
Right.
isn't this more confirmation, Andy, that, that statement that anything that could go wrong in a bull market, anything that could go wrong doesn't, and in a bear market, anything that could go wrong does.
Yeah.
Does this define it as a bear market with something
Yeah.
like this going wrong?
Yeah. I mean, I think the pressure on assets is still high. Last time we were on, we talked about my short asset portfolio. I've since covered that and moved on, but that worked out quite well. Yeah, short assets is still the likely scenario. Short, everything, bonds, stocks, gold, everything. But I'm a little bit more nuanced at this stage in terms of my positioning.
Okay.
And that's because we're in a bear market. That said, you asked about the credit event, and I consider a credit event one in which the people that owe me money start having difficulty paying me back. And the real economy, corporations, individuals, governments are more than capable of paying back. And so I don't think of this as a credit event. I think of it as a liquidity event.
Okay.
And I think you're right. I think there's anybody that, there's certain amount, when you think about your bank account, when you think about your checking account, what I would call and the Fed calls and the FDIC calls transactional accounts, big companies, wealthy people, they need to keep more than $250,000 in that account. And so the FDIC has a problem in which, a big company, now Roku had $85 million in a bank account. That's just stupid. They should be,
spreading it around.
Not even spreading it around to other banks, because you can't
be in 90-day T-bills.
Yeah, just buy T-bills or go into a wholesale money market mutual fund. Those money market mutual fund guys have access to the RRP facility. And so I think that type of stupidity's got to come out of the banking system, which means the banking system is not going to have a run per se, because that depends on if the bank is solvent, but a continued accelerating, because of the events of this week, steady reduction in the deposits as people move from the deposits to to money markets. And when they do, that'll cause some delevering pressure on banks, which means they'll need to sell their mortgage portfolio, they'll need to sell their bond portfolio to raise money to pay off depositors. Now, the Fed put in a backstop in which they can borrow that money from the Fed, and that should, ease that move. But the big deal is that there's pressure on deposits, and there's tailwinds for money market funds, bills, and the size of the RRP, which should go up quite a bit.
Okay. Overall view on dollar, do you think that we're headed now to that this first wave up in the dollar? Here's what I'm talking about, Andy, and we'll wrap it with this. So we had, the big break from 114. We bottomed at par and a half. We rallied about 500 points.
Yep.
Do you think this is it? I'm kind of thinking that maybe we could pull back here and
Sure.
then have another wave to the upside.
Yeah, I think that the problems in the United States are leading, and that's bearish dollar in the very short term, and that the problems in Japan. Now, Japan is an interesting case. They're easing. They're continuing to ease. So, with the dollar now sort of catching up and easing, I think it's reasonable that I don't think the Japanese are going to ease less. If anything, they'll ease more. So I think you have to be, against anything, you have to be what we're seeing with the yen is classic repatriation flows during a risk-off event. I think it can be bearish yen, bullish euro. And so my preference for currencies isn't really a USD bet. It's a your JPY bet. And I don't have anything on at the moment, but that's what I'm looking to add to is your JPY.
All right, Andy, great interview. And I was showing your website.
I appreciate that.
Here's Andy's website where you could get a hold of him to, have daily input of Andy's great research. I've interviewed Andy, I think it's our third or fourth time. And, his hit rate has been great with the things that he's talked about with me over time. So otherwise, follow you on Twitter at Damped Spring, like the first two letters of your two words of your website, correct?
Yep. Thank you.
All right. And Andy, any closing thoughts? What do you tell people? And, everyone right now says, what should I do? What should I do? Do you think a good option is nothing?
Yeah. So
they don't consider that an option, but it is an option, isn't it?
I have a beta portfolio. I recommend everyone have a long only portfolio, and that long only portfolio is around 50% cash, and that's a good portfolio.
Okay. All right. So keeping cash available for opportunities that will, I guarantee you, set up. Don't chase anything. Let the markets come to you. Those are my final words. And thanks for coming to us today, Andy.
Thanks again, Dale. It's always a pleasure.
And sharing your work with us. Okay, Andy Constan, everybody. Hope you enjoyed it. Good luck. Be careful. And you could join the team in about, 19 minutes for the morning edge. And I'll see everyone for Turnaround Tuesday. Maybe it'll really happen. And don't just count your pips, count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.